This is an impromptu video I'm making. I wasn't supposed to make one today. I want to tell you a whole bunch of things that are all happening now. It's all happening now. When I told you about the 1929 stock market crash, the one thing that you should have picked up from that video is that they were in the crash for many months before they realized they were in the big stock market crash, the biggest stock market crash of all time. And that is not unlike right now, in my opinion. I think that we are already in the beginnings of it. I'm going to talk to you about some technical patterns on the NASDAQ chart. I'm going to talk to you about a whole bunch of things that are all coming together at once right now, which is making me do a video on a day when I wasn't supposed to make a video. I always tell you guys that it's about the speed of the slope or the angle of the increase. If your house price increases by a little bit each year, you're not going to feel it. But if it increases by a lot in a short time frame, then you're really going to feel that. Right now, there's a lot of things that are all accelerating in their trend. All of their paces are accelerating. It's not just that there's more gold buying by central banks, for example. It's that gold buying is among more countries, so a wider base, and also the acceleration of those purchases is just getting faster and faster. I'm going to talk about a lot of things that are accelerating more than usual right now, all at once, and this is pointing to a quickening of the entire effect of the economy that I was telling you about, that we're going through this big economic pivot right now. We're at the pivot point. We're in it. And this is going to change everything financially for you in every possible aspect related to the economy, finances, your investments in the stock market, your investments in precious metals, your cryptocurrency investments even, and real estate, which is about to get a huge ballooning of inventory. And I tell you guys that a lot of the problems with real estate is a lack of availability of houses and the unattainable prices. And I say that both those things are going to be fixed as we roll into the recession. House prices will come down dramatically as the inventories balloon, and your choices to get a house will be a lot greater than they are today. You've got accelerating trends in monetary creation. There's never been more monetary creation up until this point, and in the recent years, and especially I believe what is now going to be coming up, that represents an acceleration of the ridiculous trend, an acceleration of the monetary creation. It's not only bad, it's going to get worse. And I mentioned central bank gold buying. That's accelerated markedly. It's not that they're buying gold, it's that you watch how the trend increases. That increase of the trend is what's going to make all the difference in terms of leading you to understand what's going to happen next. Our nation's trade deficit has not only never been worse, but it is also dramatically accelerating. This is all the quickening. This is all happening at once. What do you think is going to happen with this? Debt levels across all strata, whether federal debts, your neighbor's debt, your company's debt that you work at, it's all accelerating and it's having a harder time being paid, which is why you're seeing a massive acceleration in corporate bankruptcies. And with the way that interest rates have gone until sort of recently, the carrying costs on debts have also accelerated. But it all manifests around you. You can look out the window to confirm what I'm saying. You're not going to see the numbers, but you're going to see the lines of homeless people, homeless encampments. It's going to look like Hooverville's basically if things keep going this way. The lines of the food bank and the people that need assistance are getting greater. And while there's been more economic stress in the Great Depression or really significant hardcore recession right when you're in it, we've never had, besides those times, we've never had even close to the level of economic stress. If you're a family sitting around a table having dinner, maybe you're fighting about finances. Things are tough right now. People are under pressure to a degree that we have not been except for when we're in a Great Depression. And now take everything I just said and consider it in the umbrella of the fact that we're either in or we're about to have a recession, which changes all the rules as I told you. Don't worry about whether or not the recession's actually here today or not. You just know that things are getting squeezed, and at some point in there, yeah, we'll be in technically a recession. Who cares? This is all the stuff that they talk about, the bureaucracy talks about. This is a recession, that's not a recession. The economy is weak, it's getting weaker, and you know this to be a fact. I heard a senator from Michigan say something really cool, that you used to be able to work at the car manufacturing company and have enough money to buy the car that you're building. The good old days. But with the recession will come double-digit unemployment, of course. And I believe that the markets will continue, and I'll tell you in a sec. I want to talk to you about what I saw on the NASDAQ chart. The markets will continue to come down on balance. They'll go up some days, they'll go down some days, but overall, we might be in a great stock market drawdown, just like we saw in 1929. They didn't know for months. So as they lower interest rates as a response to a crashing stock market, and then they bring to bear all this absolutely excessive, record-breaking monetary creation to take care of all of the problems that we have, and understand that a lot of the monetary creation is not about, and I've told this so many times, it's not about having money to save or to pay for things down the road. That's what the debt ceiling debate is about always. It's about, do we pay the money that we've already spent, the things we've already consumed? Are we going to default or pay? That's what a debt ceiling debate's about. And if you took out every single dollar you paid to every congressman to talk about the debt ceiling and just ignored it and completely didn't ever do anything about it, it wouldn't make a single difference at all. This is such a waste of time where they're trying to look like they're doing something for your benefit because, oh my gosh, it could be a crisis. And so we need to fight really hard for it's just ridiculous. It's like the $1 trillion coin. We are living in crazy town and no one seems to be recognizing this. It's scaring me a lot. You got to protect yourself, your family, your loved ones. You need to do something about this. Inflation is bad. It's going to get worse and make things harder for you. And I'm sorry to be the bearer of bad news. I know that a lot of people really can't stand my message. But what is my message? It's the same thing it's always been. I tell you my honest opinion of what I believe the situation is. I wish it was better. I would tell you that. But the reality is that we cannot keep from going off a cliff with this debt unless we devalue the actual dollar, which would be great for anybody who's invested in gold. But there are a couple really significant influences that are going to be fighting against inflation. Artificial intelligence, for one, is going to be the single most deflationary force you've seen in your entire life by far, and it's going to get more widely used. And ignore the fact that the technology stocks are going through the roof and it became a bubble, basically. Ignore that. The fact of the matter is, we still use the internet even though the dot-com bubble burst. We still drive the car even though 1,800 car companies went out of business at the turn of the century. And the other aspect is that oil prices are down pretty markedly. They're at about $67 last I checked. OPEC Plus is talking about increasing production. At the same time, the tariffs kick in, and that's scaring people a lot. They're a little bit nervous about the economy. Uncertainty is just scaring people all over the place. Long story short, this is all happening. It's a quickening. All of these trends are accelerating at once. And I watch the acceleration more than the destination. I tell you this, if your house goes 10 times in value over 100 years, you won't notice it. If it goes 10 times in value in 1 year, you're going to notice it. This is the quickening. The speed of all of these trends has accelerated now. That's how you know the entire economy is about to crack. The great economic pivot I've been telling you about is here now. It's happening today. And with this comes an entirely new recognition about your financial situation, what's important, what real money is, whether or not you should trust fiat currencies, how you can preserve your wealth, how you can protect the people you care about. All of this comes down to the fact that this economic quickening is happening, the pivot's happening, and with it is also a good thing is going to be taking a lot of these false prophets who have a camera on their computer and they're telling you that we don't have corrections anymore. They're saying ridiculous things like that, or the most ill-advised strategy right now for sure is to buy the dip. But let me show you on the NASDAQ what happened the other day. Not yesterday, the day before that. That was an outside engulfing bearish candle. And I know you guys don't know all this stuff maybe if you haven't taken my candlestick trading chart course, but you get the idea of what I'm saying. You don't need to understand it all. That's a really bad indicator on a trading chart, followed by a gap down to the next day, which is yesterday. That is telling you that there's a lot more negative influence on the market than positive. We might bounce a bit because people are bargain hunting, thinking that it's a better deal now because the markets have started dropping on their way down 80%. People are going to get burned and broke and wiped out the whole way down. Don't throw more good money after bad. The best investors will average up. You invest in a stock, it starts doing what you thought it was going to do. You bought it because you thought it was going to increase in price. Price starts going, then maybe you put some more money into it. Not personalized trading advice. I do not give you personalized trading advice. But it wasn't just the NASDAQ. There's also some other negative indicators on the Dow Jones Industrial. And it's all pointing to one thing. That's what I tell you. Everything's connected. It's all one thing. It's not tariffs. It's not the war in Ukraine. It's not the central bank buying gold. Everything is saying, right now, we're in the economic pivot. All of the rules change now. One of the biggest beneficiaries of all of this is going to be the price of gold, and by extension, the high quality gold mining companies, the Peter Leeds approved ones that I talk about in my newsletter. They will do tremendously well. Most gold mining, most silver mining companies actually go out of business. And if you want to benefit more from me, you can learn about all of the things that we provide to help you on peterleeds.com beneath the introduction video.